hi everyone, welcome back to my channel. So in this video we'll look at another microcap stock. So I had started this microcap series long back around 6-7 months ago, and the first stock that we had discussed there was Sri Ganesh Remedies Limited, which has done reasonably well. It's up close to 80% right now. So that was on back of very good capex that they were doing. So a similar stock that is doing capex and stuff like that. So let's dive in and see why I've chosen this stock and how the fundamentals are, how it is looking technically, and what capex that it is doing. So the stock we'll be discussing today is Halden Glass Limited. Okay, so currently it's around that 94 rupees. So it's a play on consumption. So we look at what they do and stuff. Okay, so if you look at the fundamentals of the stock, it's around 500 crores market cap. The P is quite reasonable, right? So something that has been growing at a pretty rapid pace. 17p is very reasonable. So if you look at the ROC also, it is pretty good at around 17%, about 70%. So no pledged shares, and debt to equity hardly, very little, around 47 crores of debt that the company has, right? So this is about the, and operating profit margin, it is, I mean, now touching that double digit mark. But with the capex that they're doing and the kind of sector they want to target, with all that, the premium sector, the operating profit margin should only improve going forward. Okay, so we'll first understand what are the products that the company makes. So they cater to the pharmaceutical industry via clear glass vials, right? And then they also cater to liquor, that is the all the liquor bottles that you see here. So these guys make that as well, and also into cosmetics, all the perfume bottles, right? And also into the food and beverages business. So if you kind of look at India and see, okay, where India will be in the next 5 years, 10 years, so you can clearly say that pharmaceutical sector is going to do well, liquor should do well, cosmetics should do well, food and beverages, even that sector should do well. So it's basically a play on consumption. As consumption goes up in India, right, this sector, or let's say this particular company, should only improve, and that is why they are doing a capex as well, right? So these are the product that the company makes. Now we'll look at who are their clients or the customers. So if you look at the local clients, you have, like, I'll talk about the big companies: United Spirits, which is into your alcohol thing, Amul, right? Then you have Vadilal, ADF Foods, Bajaj Corp, and also in the pharmaceutical sector you have Ajanta Pharma. So they even have export. So recently they have started focusing more on the export division as well. So that talks a lot about that if they are able to export it, that talks a lot about their quality as well, right? So what is the capacity right now, and whether do they have any kind of joint ventures, and the expansion, we'll talk a little about that, so that our conviction in the company also improves. So the manufacturing capacity right now, the total melting capacity is 320 tons per day. Okay, and they are able to produce 1.5 million high quality containers every single day. So this is the capacity as per today. And they have a joint venture with Heinz Glass International. So Heinz is an international company. So basically what they are doing is they are trying to get into these clear glass containers for cosmetics and perfumery industry in India and abroad with this joint venture. Okay, so that should also help them going forward, because as you clearly know, the cosmetics and the perfume industry, even in India, right, it is kind of growing at a pretty rapid pace. And the last, that is the expansion. So they are doing a pretty huge expansion in which they are trying to cater to the premium glass sector, right? So that is premium food, liquor, candle jars, cosmetics and perfumes. So by doing that, what is happening is they are expanding their capacity by almost 1/3, I can say. So earlier it was like 320 tons. Now they are doing a 95 ton extra. So almost close to 1/3, or say 30% capex is going to come online in the next 2 quarters. Okay, so this is about the capacity, the JV, and the expansion. So the promoters, right, they have increased their stake as well. So usually this is a very good thing. Whenever you see promoters kind of increasing their stake in the company, that tells a lot about that, okay, there is something happening in the company. That is why the promoters are willing to even increase their stake. So that is what they did. And also the recent focus, like I was telling you, has been into that positioning themselves in the liquor segment and also diversifying them into different other segments as well. And like I said, there is an effort to increase exports, because usually in exports you get that higher margins as well, right? So this is what the company is trying to do. So with the capex, with the promoter increasing its stakes, and the different businesses that they are trying to achieve, target, so this company should do pretty well. And also the valuations are quite low, right? So if you look at the chart, so the company has broken out. So it is currently in stage 2, if you look at the chart. And recently again it broke out. Now it has come down, trying to retest that breakout. If it does at 87, it is good, or else it can also reverse from this level and even go up to make a new high as well. So this is the reason why I chose this company, because of the lower valuations. And in the recent quarter also, if you look at that, the operating profit margin has expanded. So with increasing sales, increasing revenue, and lower valuation, right, this looks like a pretty good bet. And with the India growth story, right, this should also benefit in the next 5 to 10 years, or even in the short term as well. Hope this helps. Thank you.